Good morning, ladies and gents. Thanks for tuning in to another watch list video brought to you by FTX. If you don't have an FTX account, then feel free to use the link in the description below and you'll receive 10% off your trading fees. So in today's video, it's just going to be a quick watch list. There isn't too much to cover. There's still a bit of confusion out there in the markets. But let's have a look at Bitcoin on the daily. As we spoke about on Monday, Bitcoin's still sitting on this support level, right? So we haven't broken that. We did have a little bit of a bounce off this level, but failed to follow through. So that just leads to a bit more confusion in the market. The buyers are struggling to push the price higher, sellers are coming back in. And I believe yesterday's candle closed quite bearish. I think there was news about a interest rate increase or something by the RBA, so that may be the reason for this quick sell-off in Bitcoin. Not that it affects the crypto market too much, but we'll dive into that a little bit later. ETH is the same, starting to look a little bit weak. You know, we've been in this solid downtrend for quite some time now. There's no real level through here to bounce off, so I wouldn't be surprised if we see some further selling off on Ethereum. But at the moment, there isn't really any trends for us to follow on all time frames, basically. Yeah, it's just a mess across all time frames. So it's much the same across the board, but we do have a few levels to keep an eye on. Ontology is one. We do have a level here, but the MACD needs a lot more work to do if that is to work into it being a trade. It will still be a few hours away, so C98 is the same, a nice level, but the MACD needs some work. KSM, again, the same. We've got a nice level, but a lot of them are very overextended from this daily cradle zone. So that's one thing to keep note of. And Pundi as well. Yeah, solid level, but the MACD needs some work. Now, there have been some questions in our community about some MACD divergence. Remember that they are indicators. They're telling us a story. We use these indicators to back up our trades. Price action is the most important, but our other indicators are, we need to take them into account. They are telling us a story. So we may be in a solid downtrend on the daily time frame, on even these mid time frames. But if the MACD is divergent and it should keep us out of a short trade, especially in this scenario. So even though they do set up, if that MACD doesn't look good, then we should stay out of those trades, because it could be likely that the price reverses and you get stopped out. So just remember that. Don't go taking trades just off price action itself. Always remember to look at your indicators, because they are telling us something. If you have any questions, feel free to throw them in the questions box and I'll answer them, or if you have any coins that you want me to look at, I'm happy to do so. But yeah, as I said before on Bitcoin, I think it was yesterday that the RBA announced an interest rate increase. So for those of you that aren't aware of how that may affect us, I'll give you a brief overview on what my thoughts are on this and how it may affect us. Basically, when interest rates increase, people, your average Joe Blow, people like me, you've got a house loan, your interest rates increase, so your repayments go up. What does that mean? That means that most households will have less disposable income to spend at stores. You'll still buy general goods like groceries, but your disposable income for furniture or things that make you feel good, generally that goes down. So you have less money to spend at stores like that. Therefore, those stores, their profit and loss will go down. Their profit will especially go down because people are spending less money in their stores. And hand in hand with that, if they have any outstanding loans or loans to the banks, then their repayments will go up because the interest rate's gone up. So generally, a store or a shop or a company, their profit and loss will take a hit. They'll make less profit for the year, What does that mean for investors? Investors are less likely to invest in those companies through shares because the profit's less, they'll get less paid out in dividends, and they're probably more inclined to put their money into more stable things like government bonds because they're probably getting a better rate there. So we may see a lot of selling in the traditional markets if these interest rates continue to increase. How does that affect us in crypto? It shouldn't really. But as we saw, especially during the COVID pandemic, we saw Bitcoin, shoot down to about $5,000 and the stock market crashed. But Bitcoin was really quick to bounce back, which is a good sign for crypto. Will that happen in this scenario? I don't know. I don't have a crystal ball, but it could very well happen. But all we do know is that we're sitting on this solid support level, and nothing really is happening for us as traders. There's barely any trend on any time frame across the board. So my advice would be to sit on those hands and wait for those trends to come back. It may be some time, but as traders, we want to protect that hard-earned capital that we have and just trade in good trading conditions. All right, it doesn't seem like there's any questions. But if there is, feel free to reach out to me in the community or Lou. We're happy to answer those questions and help you out. And if you'd like to know more about any of our courses, we do have a free course on the TRADERCOBB website that will teach you the basics about cryptocurrencies, trend, and a few other handy little educational videos in there. If you do like that, feel free to go on and purchase the master course where we teach you the 3 trading strategies, and you can jump in the community and begin trading with the rest of the community. So thanks for tuning in, guys, and I'll chat to you again soon.